Good afternoon from the floor of the CME. This is Chris Robinson with your Traders Exclusive comment for today, Thursday, March 29th, last business day of the month, last day of the quarter. And we had a big USDA report today. I'm going to focus on grains and cattle, like I always do. And I talked for a while about the importance of this USDA report. I talked about the setup. The fund's massively long, 1.3, 1.4 billion bushels of corn, about 1 billion bushels of soybeans. They were short about 250 million bushels of wheat. Today, the USDA surprised everybody, really a game changer. We lost, compared to last year, the planting intentions are for about 2 million acres less of corn and about 1.3 million acres less of soybeans. That's a pretty big change in planting intentions, and the market took it on the chin today and really got after it. You had beans up 30 cents, corn was up 15 cents. We had new life of contract highs for new crop November beans. You had corn, both old crop and new crop, make 8-month highs, and really a great performance. A lot of people were worried that we were going to have a negative number and move lower, and I think that this moving forward could be a very important number that we look back on the rest of the year as sort of an area where the tide really changed. The number one thing you've got to watch now is now the funds, they're already long. Now they've got a reason to buy more. And I think next week as we start the new quarter and the new month, you're going to see money come back in. The one thing that managed money does well is when they're right, they add to their winners. And I would anticipate that moving forward. All we need is some sort of a weather issue between now and June or July, and we could have a good run at last July's high in corn. So all in all, if you're a corn producer or a speculator, nice bull move today. It did pull wheat up a little bit. I'll talk about that next week, but I think that was the big thing today. Very bullish planting intentions number with those loss in acres of both corn and beans. Big mover. Switching over to the cattle, we've got the flip side there. Cattle had just recently been at contract highs 3-4 months ago. We'd had a nice rally all through 2017, and what you've seen in the last 2 to 3 months is we've given back 6 months worth of higher prices, and now we're struggling with retesting contract lows from last year. The number one thing you're seeing there is fund liquidation. The funds held it up all last year. You're seeing fund liquidation there. And I think that there's people that are stepping in trying to bottom fish the livestock market. I would be very careful. The livestock market does not like $4.50 corn. Now we're at $4.12, $4.15, but that's a worry for most producers. If you get corn around $4.50 or north of that, it's going to hurt their bottom line. If you get soybeans up above $11, $12, $13, that's going to hurt the hog producers because they buy a lot of soybean meal to feed their hogs. So if you're if you're a farmer or a rancher or a hog producer, it's kind of a shot across the bow. You need to look out ahead, and worst case scenario, make sure you're taking some price protection in case we really do have a big bull market and higher prices this summer. The setup is there. We're going to see what happens weather-wise moving forward. But all in all, a good way to end the first quarter of the year, especially if you're a bull. This is Chris Robinson. If you're looking for help with your hedging or you're speculating, give me a call. Look me up on the web. Have a great Easter weekend.